Hello, everybody. Jim Malone coming to you live on Dallas Trading Floor. Well, the Fed has met, and they did decide to raise the interest rates, which was no surprise. The interesting thing was the market had figured in a 75 basis point move. It was only 50 basis points or a half a percent. So that was good. The market did rally because, of course, it was less than the worst case scenario that many on Wall Street had expected, where it would move. It would basically move up 75 basis points. But it still is devastating for the housing market. And one of the things I think we're going to see in the near future is we're going to see, some issues in the housing market because, even though it's only a half a percent rise, you say, wow, that's not that much, but it is because it's creating 5 and 6 and possibly 7% interest rates on houses. And with home prices at a record high, that could be an issue, if the market slows down. So that's just something that you gotta look at very, very carefully. And it's basically, that's basically it. So the rate hike of 50 basis points is basically, according to Chairman Powell, this is on for the next probably two meetings. So it's they're not considering going up 75 three-quarters of a percent or 75 basis point, but one half percent or 50 basis points for the next meetings. Definitely, interest rates are going up. So we got to figure this into the calculus here. It's going to be tough for a lot of people. Coming up, consumer spending is likely to take a hit on this as people move to things that are just more staple related than that. So the market is extremely defensive. I've been looking really in just very much, I was almost to zero in the market, and now I'm pulling back in, but I'm really going only into areas that I think have a good chance of success. Basically, want to show you the two stocks that I did buy today. And I did add to my Exxon Mobil position, and then I also bought the XLE. This is the Spider Select Energy Fund, and these are amongst the best performing stocks right now, or ETFs, in the market. So that's one thing you got to kind of look at here. Really, basically, it's the oils. There is one stock on deck that I think that you can possibly look at as possibly buying as you're kind of moving into the market, kind of moving out of cash. Now, interestingly enough, this is the third follow through. This is the third day. If we get another up day tomorrow, that means that we'll have a follow through day on Friday. And if that happens, then we will want to start getting back into the market. There'll be a little bit of a rally. Who knows what's going to happen? Just I've been very, very cautious. I don't have a lot of positions right now. Just, trying to be very, very, very cautious in the market. Currently, this is what I've got. Basically, I started buying Chevron on Friday. It's up today. Volume's down a little bit. Mosaic, this is a fertilizer company of all things. I was buying this on Monday. And of course, I bought Exxon and the Spider today. They were both up. So that seems to be where the strength is in the market. So I know that, I would just love to be buying some technology, but I just don't think right now it's the place to be. I mean, it's just not the place to be in the market. It seems as if, what I'm seeing at least is that the market tends to be moving towards the oils. And then there is one area that I think is right at a buy point that we might want to possibly take a look at. Now, I'm going to show you three stocks that, now two of these I have purchased already, but I want to show you these three stocks here that I think that you can buy. And I'm going to show you the current price and the buy point. The buy point, of course, is the pivot that's kind of what I want to show you here. Of course, ExxonMobil, that just moved above the pivot today. I did buy it earlier before it moved above the pivot. It is still buyable up to about 5% above that buy point at 89.80. Current price on ExxonMobil, 91.70, and it's a pretty good chart. I want to show you that chart here just in a second. So let me share that screen with the live chart for ExxonMobil. Let's take a quick look at it. It basically has moved up through this cup with a handle. I bought here at 88.51. We're at 91.30. So we're up. We're starting to go into the buy zone here. We can buy it, up, just a little bit higher here, but we don't want to go too more. This is my second buy. I haven't made the notation, but I made the buy below the buy point, then basically at the buy point, and I may make another buy on this one tomorrow, just depending on how healthy it is. Wanted to show you some other things about this one on the technicals. And these are the moving averages on this one. Currently, we are pretty extended. We're at 6.62% above that 10-day line, but we are still so we are a little bit extended here. So even though we're technically in the buy zone, we really shouldn't be buying more than about 5% above that. So if you do decide to move into Exxon Mobil, if that's that fits the bill, please be aware that you don't really want to buy it too much higher than this based on those indicators. So right now, the way it's looking at, the buy point 89.80, hopefully we'll get a little bit of a pullback. It looks as if we did get a little bit of after hours pullback to 91.30, but we really don't want to buy it too much higher than that. I know this is, I'm getting really technical here, but that's going to probably give us those best results. The movement in the market is into some of these larger integrated oil companies. Of course, as you all know, I own Chevron as well. I would buy that one Friday, and that one has performed well as well. There's another gas-related company. Now, it's not a gas company in that it doesn't drill for it. It's a transport company, and that's Cheniere. Symbol on this one is LNG. The current price on this one is 146.40. It is below the buy point. The buy point being 149.42. Let's take a look quickly at that chart for LNG. This is Cheniere, and this company liquefies natural gas. And their entire book, from what I've known, I did a little research on this one. Their entire book is sold out because this is the industry that is going to Europe. So they're in a good sales position now. They just came through earnings. They are in a loss position on earnings, but it didn't affect the stock because their sales are so strong when it comes to that. So basically, this is coming into right into the buy zone. Now, as you can see, I've been accumulating this one a little bit here, and I may buy more, but right now it is buyable, even though it is below that buy point. So that's another one you might want to kind of take a look at. Now, the third one that I want to show you, and this is one, I haven't purchased this. I'm not in this sector yet, but it looks as if, most of my buys have been in the oil patch, but the drug sector is a potential. And Merck, MRK, is one of the biggest drug companies, of course, and they seem to be, they're set up very, very well technically to buy. So let's see if I can get that up there. MRK, of course, is the symbol for Merck. There we go. And as you can see, we're right below that 89.48 buy point. But the stock is reversing higher. And I do believe, even though it pulled back to 88, it is still at a position where we're about 1.1% below the buy point of 89.48. So this is actionable right now. We do have an increasingly, we do have a good relative strength line And some of the other things are pretty favorable for this. Again, I've been a little bit shy because, I'm just trying to get into the very best things that are looking the best technically. If we look at the checklist here for Merck, it's 100% checklist. So I'm just trying to right now buy the best setups that I possibly can. I definitely think you could buy one full position here at this level. So that might be something that you might want to look at. The buy point on Merck, 89.48. Current price, 88.52. It's right below the buy point. So, you could come in there with a full position. And the question is, what do I mean by this full position? Well, think of your portfolio as a pizza, and there's 8 slices of that pizza. One full position is approximately 12, it is exactly 12.5%. So if you come in with on a good stock, the maximum you ever want to buy at one fell swoop is one full position, and that would be 12.5% of your portfolio value in that number of shares would equal. So that's how I do it to keep my account balance, and that helps a little bit in the control. That helps a little bit in the in the loss control. So always remember, if you buy a stock and it moves down more than 7% on you, please sell it, because in this market, it's a very volatile market where it is starting to make a move from a uptrend from a market in a correction to a confirmed uptrend, but we're not there yet. We have to wait for a follow-through day. Now, if we get another update tomorrow on Thursday, then we will have 4 in a row, and that qualifies as a follow-through day. But we want to wait through that follow-through day before we do anything else, because this is a tough market to trade, and there's just a lot of pitfalls along the way. So right now, I'm concentrating all of my buys essentially in 2 areas. Well, really one area, and that's primarily oil. And then I am looking at some kind of tertiary areas of the market. One of them is what they call ethical drugs, and that's where Merck is, MRK. So just want to say, and we have a question from Jay. He says, Apple's out of control. Absolutely. Apple has moved up very nicely today. I still wouldn't recommend buying it in this market, though. I mean, there's a lot of reasons for that, but let's take a look at Apple. Apple had very good reaction. I mean, it was up, it's up 7, it's up strongly. So, that is definitely, we're finally starting to get some support here. Now, if it can stay above, and it does look like it's going to stay above that 50-day line there, I mean, this is the potential, the beginning of the reversal, but I'm still not sold on it. And there's a lot of reasons for that. It has moved above that reversal line, but we were still well below the 182.98 buy point. We really kind of need it to reverse and then get some more strength and move up to this 182.94 buy point. That's really where we need to have it before we can really consider that it's turned the corner. Here's the problem with the telecom and the consumer goods area. It's 78 out of 197, and in this market, boy, I tell you what, it's a tough market. I think that in order to buy this, you're really going to have to wait, and it's going to have to be above 170, because the buy point on this one, 182. So I am kind of taking a wait see attitude now. I may that may not be the right thing to do here. I may miss the boat on this one, but with Apple, I would just, I know this is really painful because you're looking like, wow, I could buy it way down here. But remember, it still is just started to reverse, and it's still in this consolidation. And really, we need to need it to go to a higher high, and that's really not where we're at right now. So I would not be a buyer of Apple. I'd watch list Apple, absolutely watch list Apple, but I'm not going to be a buyer of Apple at this level. It doesn't work for me because, just because of the way the market is, in basically the market. So Right now, three stocks I'm targeting, of course, are Exxon, XOM, Cheniere, LNG, and Merck. Currently, I'm going to probably be trying to, if Merck moves to the buy point, I may buy a full position in Merck tomorrow. I'm on the fence on this one. Probably won't do anything on LNG right now. It's a little bit too volatile for me, but a good stock. I definitely am in Exxon. I may add to the position. I've had 2 adds so far on ExxonMobil. And of course, what I'm trying to do here, of course, is a swing trade. We're trying to buy it, move it up, and then, if we get, a 5 to 15% move on it, then we're probably going to sell it just because of the way the market is right now. Definitely the way the market is right now. Hey, thanks, Dan, for writing in here for Mosaic MOS. I'm in Mosaic. This is a fertilizer stock, and unfortunately, with the situation in Ukraine, we've got to be cognizant is that fertilizer stocks are probably going to do very well. Now, what happened is I bought basically yesterday a full position at 68. Now, it's down a little bit from that. It closed at 67, but it looks like it's getting some support right here at the 50-day line. Now, here's the thing. I won't hold it if it moves. You can see this little mark here. That's my stop loss, and it's right below 60, where the bottom of this is. I'm only going to be in it as long as it's above about 60. Anything below that, and I'm probably going to be out of it. But I believe that it's reversing course. This is an extremely strong area. Agricultural chemicals is the number 2 area in the market right now. So we're definitely in the right. We're in the right area. And the question is, are we in the right stock? Well, there's 2 stocks that are really strong that are Mosaic and Nutrient, NTR. That's the other one. Now, this one has a pretty good checklist, 7 out of 9. So a 79% checklist. So that's looking good. Now, the other stock that you might consider in this area is called Ntr Nutrient. And this is a Canadian company, and it's the largest fertilizer company in the world. It has a very similar chart to Mosaic, and this one is not quite as actionable yet because we're forming a base here, but it's not quite as actionable, but it's still a really good stock. Let's take a look. This has got a 100% checklist. So if you are, with these commodity stocks, the buy points aren't as critical as with some of the other stocks, but this is also set up very well. So if you want an alternative to Mosaic, I think one of the places to be is in Nutrient, NTR. And the reason I believe this is because this is indeed one of the biggest areas in the market in terms of, in this market, in the fertilizer market, there's really 3 companies, CF Industries, Mosaic, MOS, and Nutrient. And Nutrient is the biggest. So that's one you want to look at as well here. But that's a great question. That's a great question, Dan. Really appreciate that. Also, let's take a look at LNG. And of course, this is the one that is very close. This is very close to a buy point, very, very close to the buy point. And this one moved very, very nicely today, and it's moving after hours as well. Now, there's a little bit of a danger in buying this one, and it moved up so fast it pulled right down to the line, and then of course you can see I've been trading this for a while. I was stopped out, and then I moved back in because I do think this is such a good play. I may be adding this one tomorrow. I'm not sure, but I definitely want to see how this opens. I think that you could buy it right at the buy point. 149.12 would be a good place to buy this one. I do believe it's going higher. Now that it's through earnings, I think that we have a pretty strong stock on our hands. It's got a 78% approval rating, as it were. And let's look at the pattern recognition on this one. We're basically just 2% below that pivot. I actually calculated at 1.1%, but it depends exactly on how the calculation is. But we're very close to that pivot, and we've moved very close to that. So, and by the way, this is a secondary. This is a secondary base. The flat base came here, and we're in 78 days. We're all the way from basically here all the way up to here. So this is definitely an appreciating stock. It's in a great area of the market, and even though there's a lot of uncertainty in this market, and there's a lot of areas in the market we don't want to be in, this is one of the areas that I think you could definitely be in. So this is buyable, and the pivot on this one, the buy point is 149.42. So that's looking pretty darn good. I think that you could buy this one, even though they're in a loss position. And right now I'm very careful about stocks that are in loss positions. This one is, I think it's a leader, and I think it's going to be a lot. It's going to do good things, mainly because of the demand. Their order book is completely full, so it's looking pretty good. Let's look at MUSA. Thank you so much, Matt, for that. MUSA. And that is Murphy Oil. This is one I had. I do like this one. I'll be honest with you. I do like this one. I'm not in this one right now, mainly because technically it's not at a buy point, but that's just because this base isn't long enough. This is a very nice reversal. You'll notice with many of these oil stocks, they're moving right up that 21-day line. That's this green line here. It came up. It was staying way above that, and then it came up to this 249.11 area, got some resistance, pulled back, hit the 21-day line. Boom! It's back up again. Now, if this can get over 250, if MUSA can get over 250, it's probably going to go higher. And one of the good things about this particular company, as a matter of fact, here in Dallas, right next door to the office building where we are, is a brand new Murphy USA company. So they are regional based kind of convenience store, gas station, and they're doing well. So and they've got good expansion plans. So I do like this one. It's also got a 100% checklist. I want to point that out. You could buy it at this level. This would not be my preferred level to buy it. The ideal place would have been to buy it here on the pullback. That's the secondary buy point. The primary buy point would be at the pivot, and that's right back here. The pivot being basically this cup with handle at 195.68. That was where the first buy point was. From there, if we, here's where I was buying too early, and then I got stopped out, and then I should have just waited, put this on the watch list. This is why patience pays big dividends, and waited until we came back above that buy point. But right now, I don't know. I don't think you want to chase this too much, but we probably still could buy it here. I just think it's a little extended, though. I think it's a little extended, so I would be somewhat careful about buying MUSA at this level. So even though it just had some great earnings. Let's look at their earnings. They came in, and I think they came in very strong. Yeah, look at that. Okay, March 22nd. So that was into their first quarter. And boy, look at that. Their sales were up 45%, and their profits, and that's the key, 202 over quarter. That's really good. But right now I just think I would like to say that to buy it here, but I just think you're chasing it a little bit. Wait for this to catch up, wait for it to form another base. I just think you've got to watch this here, Matt. I think it's just, this was up 12. Look at this. There's a lot of buying in there. $12.50. This was up. So very powerful. I just think you got to wait on this one. Let it pull back, let it settle a little bit, and then maybe take a run at it, because I think what's going to happen is it's going to pull up here, and then it's going to readjust down a little bit, and then we're going to get right to the 10-day line. here's where I would recommend possibly buying it. I'm going to go to the technicals here. I'd buy it right about the 10-day line. If it pulls back to about 237, I think you could buy it at that level. So I would wait for a pullback. And this is pretty aggressive, but I would wait for a pullback to 137. So that's kind of where I would be looking at it, because that's where it would be closer to the 10-day line. So terrific performance. This company is moving very, very nicely, but I think we got to wait for this one to pull back. Right now it's at 246.20. So I think it's a little bit high. Now this is in a good area. This retail super mini markets is a good area. What I like about this though is that it has the oil component. This is a kind of a these have gas stations and mini marts, two of the actually strongest areas right now in the market. This is where you want to be. This will do well in an inflationary environment. And so, but I just think you've got to wait for a pullback to about 137. I think you just really do, because that would make it probably, it's a little extended right now. That's the problem when you're waiting. That's the problem always when you're waiting, and you're waiting till after earnings. If the earnings really blow out, the stock moves really more, and it becomes extended. And then you say, "Well, I missed it." Well, it's a patience game. You just got to wait for it to pull back. But I think that you're definitely on the right track with MUSA. I really do. It's got a great checklist. It's in the right area. I just think you have to wait for it to pull back to about 137. That's where I would buy it. So I would put in, if you're worried about getting that, I would put in a limit order, possibly at 137, and maybe buy a half a position there. So that's kind of how I would do it. But really appreciate that. Great question. Let's look at ATI and get it going. ATI. And let's take a look. Allegheny Technologies. Boy, you're picking some really good ones here, Dan. This is a good stock. This is sort of in the steel area. It's specialty steel for the aerospace industry. What's interesting and good about this one is the fact that because Europe is in an energy crisis really right now. As a matter of fact, Germany has some of the highest electric costs in the world right now because they use natural gas to generate a lot of their electricity. And of course, they're not getting that from Russia. And they also, unfortunately, for them, closed down. They're going to be closed. They've closed down their nuclear facilities. So they've got basically natural gas from Russia that's threatening to cut it off, and a bunch of windmills and solar. And solar just doesn't work that well above. Germany is really just too far north, really, for solar to work. Works better towards the equator. So many of the competing specialty steel companies that are based in Europe, are going to go offline because their costs are going to get too high. So Allegheny is going to get a cost advantage. Of course, they're based in, I believe they're based in Pittsburgh, in the Pittsburgh area. And of course, they've got some of the cheapest electricity in the country because they get it from Quebec, believe it or not. So the energy grid goes up into Quebec with the world's most affordable hydropower is basically out of Hydro-Quebec, and of course it's sold in Northeast and particularly in the Pennsylvania area around the Great Lakes. So Great Lakes actually have an advantage in terms of costing with electricity because of dams built in Quebec. So long story short, I'm going into a lot of detail here, but I think this is a good stock. Unfortunately, I don't really see, right now it's extended. The last buy point on it was right back here. Basically, let's see if I can get that. Let's see if it'll let me do that. Okay. The last buy point on a cup with handle was basically right there. Okay. So let's go and take a look at the take a look at the pattern rec here. Basically, we're 35% above that pivot in about 64 days. And what does that mean? Well, the correct point to buy that would have been at about 21.52. We're currently at 29.61. So in terms of dollars, we're not that far above it, but in terms of percentages, we are. So here's the thing. I think you've got to wait for this one possibly to pull back to the 21-day line. That's probably where you could buy it on a secondary buy. So what I would do on this one, if you're interested in it, and we're pretty close to it, you could set a limit order at 27 at 27.91 if you wanted to pick that up, because that one would probably work well. So here's, if you're interested in buying Allegheny ATI, I would set a buy for set a limit order. There we go. A limit order at the 21-day line, and that's at let's get that right, 27.91. Now that's not a primary buy point, but it is that's a good place to buy it, because it's right at that green line. Right now it's moving, it's kind of consolidating down a little bit. But one of the things I like about this, again, this is in the materials area. This is the area that you can buy in. 21 out of 197, so we're definitely in the top 20% of the market. We have a upward trending, and if you can see this blue line here, we have an upward trending relative strength line. This stock is getting stronger relative to the rest of the market, so that is indeed good. Let's look at the checklist. It's not a perfect checklist, but it's not a bad one. It's basically an 89 checklist. The only thing that it is failing on right now is earnings per share, and I suspect that's going to be improving. So let's take a look at the earnings potential here. We just came through earnings. We were up 20% in sales, and we were up tremendously in profit. So this has not been doing great for the last few years, but now it's starting to shine. Here's a little bit of a concern for me, not necessarily a deal killer, but a concern for me. The PE ratio currently on Allegheny is 48. This is high for the steel group, but it does have cash flow. I really like that. And it does have a return on equity of about 3%. So this is not completely the best setup here, but I think you could buy it with a limit order. But really, you're probably going to wait a little bit, because you could buy it with a limit order, but I would be a little bit careful, because I do kind of think that I really think that it's a little extended right now. ATI is a little extended right now. It's a great stock, but there's just certain places that you're going to have a little bit more risk in terms of buying. Right now, it's extended above that buy point. The buy point is basically, the current buy point on this one is basically at 21.52. So at 29, we're fairly extended from that. So what I would, and this is hard, what I would recommend doing is waiting a little bit, seeing if there's a consolidation around that 21-day line, and then buying it there. So that's but it's a good stock, and good potential on it. So, but I wouldn't put this on the top of my buy list, though. This would probably be a watch list for me, just because of those things. A good stock, just not ready to go. Totally, not ready to go, unfortunately. All right, let's take a look at the SPY. Thanks, Chuck. I appreciate that. The SPYDER, of course, is the ETF that covers the S&P 500, and at least the last with if the market turns up, if we get a follow through day, and we're one day away from that, then this is going to be a better play. But right now, I think you got to avoid it, and here's why I think that. Currently, the SPYDER is below the 200-day moving average. And why is that 200-day moving average so important? Well, if that 200-day moving average is moving up like it is here, that means money is coming into the market. If it's flat like this, it means that money is sort of on the fence. If it's pointed down, then that means that money is moving out of the market and out of this issue. Right now, we are below the 200-day moving average. So I would just have to say not to buy the spider at this point. Let me give you a better alternative possibly. If we look at the select area, there's this thing called the spider select. These are sections of the market. There's 11 of these, and there's two ones that are top performing right now. The top performing spider select fund is the XLE, and this is an ETF, and this is correct in a buy range right now. This is the number one ETF in terms of a sector of the stock market right now. This is the XLE. There's another one that is also positive for the month, well, actually for the quarter, and that's the XLU, and that's the utilities. These are extremely defensive, but with this high interest rate environment, the market is highly defensive. This one is in the buy zone as well, and it's come down and it's now getting support here. This is probably, if you're looking to buy if you're to buy an index fund, this one also might be on the list. But currently, I would avoid the spider and possibly buy the XLE, because that's the ETF that is doing the best in terms of the market overall. Jim, are you still holding short positions? Yes, unfortunately. You are right. I have a short on Disney, and I also have a short on Boeing, and I have a short on Salesforce. Now, with the way things were working today, my short, and I'll show you this. Let's look at Disney first, because I like to show my best stuff first. With Disney, as you can see, this is my short on Disney. I shorted it here, and Disney pulled all the way down and looks like it's bouncing up. I'm still positive on this one at the 116 range. I may close this one. I don't know. Probably may take profits on this one, but this one pulled down, and we'll see what happens tomorrow, because I don't think it's going to trade above the 10-day line. And on this one, it's still positive. I'm still making money on this, so I'm still short on Walt Disney, and I entered that on the 25th. Now on Boeing, I thought I would outsmarted it, but on Boeing, I am not quite as good. I'm just about even on Boeing. I put a bear spread on this one on the 27th, and as you can see, it pulled down, and now it's touching, and it's pulled right up to basically where I bought it. Now it's off a little bit after hours, but we'll see what happens here. If this continues a downward trend, I'm gonna keep it open. I'm going to keep it open as long as it doesn't trade, as long as it trades below the 21-day line. That's why I have this stop loss here. But I am short Boeing, but don't enter the Boeing. Don't enter a Boeing short. Don't enter a Boeing short here, because this has popped up here a little bit. Hopefully, we'll continue the trend downwards, but it's still open now. On Salesforce, which is CRM, that's the symbol on it. I also have a short, and that one, unfortunately, has gotten a little bit away from me. What's happened was I shorted it, and now it's come up to the 21-day line. If it moves above that 21-day line, I will close that short. But as you can see, I'm quite close to possibly closing the short on that one. Right now, it's down a little bit after hours, just 1 cent. We'll see what happens. But if it continues the trend here, I will keep it open. But I may be closing this one, my short on CRM. But that's a great question, and thanks for asking. Appreciate it. And I will keep you informed on my short positions. All right, safe to enter now. In NVIDIA and Costco, no, no. Unfortunately, I love NVIDIA, the company. I think it's a great company. It's just that it's in the wrong sector of the market right now. Let me show you why, Antonio. The reason I wouldn't enter this one here is because, unfortunately, we are still below that 200-day moving average, and this is key. You see this red line as it's moved below that 200-day line? Well, that's the death cross, unfortunately. And that means that in the short term, even though we had a movement up here, NVIDIA is going lower. So I would not enter it here. I would not enter it here. Based on this chart, NVIDIA is going to go lower, at least for the short term. Why? Because the 50-day line has crossed below the 200-day line. Even though the 200-day line is moving up a little bit, the fact that the 50-day line has crossed below the 200-day line indicates that in the short term, people are selling this one. And so even though it looks good, as you can see, it went up today, but I'm afraid this is going to probably reverse lower, especially if it gets up to the 21-day line. So my guess is no, I would not be in NVIDIA. So, that's painful, but I would say, no to NVIDIA for now. You're just not in the right phase. It's not in the right. It's not in the right part of the market. The electronic semiconductor fabless area as a part of the market is 158 out of 197, and unfortunately, that makes it in the lower quadrille, the lower part of the market. So we want to try to buy things as they're moving higher or in a better part of the market. So right now, unfortunately, it's just not in the place. It's not in the cards. I would not buy NVIDIA at this level. Let's look at Costco. And that's another one that I think is very interesting. Of course, this one is possibly a little bit better deal because it's in the consumer staples area, which is higher rated than the semiconductor fabless. This is in the top 20%. So according to this, the major discount store chains, 42 out of 197. It's still not a great category, not like oil, but it's not as bad as some of the other ones. It's right basically at the pivot. The pivot on this one, the buy point, 545.29. It's at 544.31. So basically, it's right at the pivot, and it's trying to move above that. Now, here's the problem with Costco. The reason it came up to here is because there's a resistance right there. And we know that if it can pass through the resistance, maybe it will go higher. But you know what? I just think that you don't want to risk it. You don't want to risk it. It is above the 200-day line. I do like that. But I just think that, yes, it is coming technically into a buy point. But I just don't know about this one. If I did invest in this one, I was in this one as it moved above the pivot the first time. I made the mistake of not selling out quickly enough, but you notice, it moved very nicely, and then wham, it came right down. So I think that, we're just going to see a consolidation really from about this 6-12 level, in this area is where we're going to see, is where we're going to see Costco moving. So, it's sort of in this area, and it's bouncing. It may move up to the top here, but I would probably stay away right now because I think that even Costco, with as good a company as it is going to be more difficult in terms of in terms of buy. So I would probably watch this and not. I just wouldn't be in it right now just because Jerome Powell's genius. Interesting. Thanks, man. Thanks for everything. Okay, so let's take a look here. Oh, is it shortable because of high? This is a good question. Baba, shortable because of high interest rate, slow housing market? I would be careful on Home Depot. Here's the thing. I think that the slow housing market is going to be tougher for the home builders, and it might actually be somewhat good for. In a really perverse way, it may be somewhat good for the Home Depots of the world because people are going to fix up, and that's what happens when home sales, slow. Usually, is that you have these situations where, Lowe's and Home Depot pick up because people fix things. But I wouldn't buy Home Depot here. Why? Well, for various obvious reasons. It's below that 200-day line. That's critical. I don't want to buy below there. Nothing really good goes on below this 200-day line. Another thing is that we have that 50-day line diving below that 200-day line. What that says is that In the short term, people are selling this. Okay, even though we may have even though we had a movement up today, in the short term, if you draw the reversal line, that's your reversal line, and it's way below the 200. So I just probably would not be in this one. I just wouldn't be in Home Depot. Let's look at Baba. Baba is probably another one of these ones that, in a different time, this was an awesome stock. I definitely bought it, but this just is a terrible chart. This is a terrible chart. Now, I wish I said, well, because so much had come out of the that I wouldn't short it, but it looks as if it's shortable. Now, I don't think I'm going to be shorting it. What's happening is it's coming down, bouncing, coming down, bouncing, and it's just it's just moving like that. So, but would I buy this thing long? Absolutely not. Absolutely not. It's just too dangerous. All right. Well, we're getting kind of to the end. Dead cat bounce. Yeah, that's what you got to watch out here, Derek. Is that? Yeah, I mean, we do have a potential for a dead cat bounce. We just do, and this was a relief rally. There was like, wow, it wasn't 75 basis points. It was only 50. So hooray. So that's, before we go in further into the market, we're going to have raging inflation. It's just one of those things. Before we go further into the market, let's wait for that, hopefully, follow-through day on tomorrow. Hopefully we get the fourth day where all where two or more indexes are up. That would be a follow-through day. If we have higher volume, which we may or may not have, then we can possibly try to move into the market. But, we may have a dead cat bounce. You're absolutely right. That's why we got to be super careful. That's why I'm exposing my portfolio primarily to the strongest sectors. And right now, the strongest sector out there is the oil sector. And that's where I'm doing most of my exposure. I'm oil, natural gas, things that are going to benefit from inflation. So that's kind of where I'm at right now. So hopefully we'll have some better news. Yeah. In the best place if you're going to deploy any cash right now, I think that energy sector is the place to be. I just want to show you the easiest way probably right now is just to buy the ETF, and that is the XLE. This is probably the way that what I would recommend if I wanted to get back into the market. Don't go hog wild. Don't put in, don't throw down. Don't throw down on this one. Half or maybe a full position on this one. That's it. This is what I recommend, the XLE, because it basically you're buying the energy sector. And right now, that's the one that's benefiting the most. Well, thank you very, very much, everybody. It's always a pleasure. I'll be back tomorrow, of course, with more stuff. And if you're not already on the Action Trade Alerts, it's super easy. Just go to www.dallastradingfloor.com, first and last name and email address. And we send out some special stuff like, heat maps and stuff like that. We also have a trading community. We have a special Discord that's available through www.dallastradingfloor as well. So you can see that as well. So until tomorrow, until tomorrow at 5, let's see. Did I get everybody? All right. Yeah. I wish I had more time. So, hey, everybody, just, get on the list. And I'm going to be trying to put out some more like alerts, buy points, and that kind of stuff. More of that stuff that I've been doing on the show, because I think that that's real helpful, especially when we're trying to get back into the market. But I'll be back tomorrow at 5. Thanks, everybody. Oh, by the way, super important, please like it, because that really helps me a lot. If you like the show, then it gets me out to more people. I'm still trying to build. I have lots of great people on TikTok. I'm trying to build a bigger audience on YouTube. So please, it's also, if you can like me on TikTok, that's great too. But please, if you're on YouTube, please like me on that. It really helps me a lot. And I will be back tomorrow at 5. Thanks, everybody, and happy trading.